Hey, welcome to the Closing Beat, everybody. Happy Monday. How you doing out there? Hope you're having a good day. All is good with you. Welcome to the Closing Beat stock market update show that we do to cover the stock market and how things are going for the day. Happy to be back, ready to get started, and a lot to cover today, by the way. First up, was out of town last week. Want to say hello and thanks to Tim. Nice to meet you up there at the Cedar Point, riding roller coasters, and your beautiful daughter, Savannah. Brave little girl, by the way. Hello, Savannah. Out there riding roller coasters that I don't think my daughter would have rode, so awesome. Love to see that there. Anyways, back to work here. Let's see what we got going on here for the day. I'm going to cover some of the traffic at the airport, by the way. We'll talk about that as well. But anyways, we got stock market down. We start the week with a pretty sharp move lower here. We've got the Dow lower. S&P was lower, but not by that much. We'll have to check that. That's not accurate at all. A lot of weakness out there. So you've got, just concerns about the economy, concerns about the stock market, virus concerns around the globe, now political concerns as well with the election and the new Supreme Court justice and that whole battle that's about to take place there. Oh man, is the world falling apart? Well, you know that now you go, no, it's just September, man. That's just how September performs. Let's take a look here. I'll go over and show you this real quick. If we take a look, shared this with you on September 11th and then sometime before that as well. Here's the average performance of September throughout the last 20 years, meaning a composite performance. All we basically did was go through and average out every single day and show it on a chart. We know that the second half of September tends to be a weak point of September. We're ahead of schedule in terms of that weakness, but in terms of the market performing as average, it's actually doing what it's supposed to do. So you guys know, if you watch the Closing Beat, that we actually have pretty much exactly what to expect. If you're a research member, take it a step further, go into research site. Cody gave you a great post in here, the September sector breakdown, where we went through the different sectors and how they perform, which sectors are strong, which sectors are weak, in particular why. So Cody broke that down for you in the research site. If you're not a member of the research site, maybe check it out, jazzwealth.com/research, all kinds of good stuff in there and stuff coming up there for you as well. But you know, September is where it's at. I actually even covered this second half returns for the top and bottom different sectors in there to kind of show you what's going on. So we talked about materials being some of the weaker areas. We're going to cover that here in our sector breakdown. It's just interesting how this is playing out exactly as it averages, although in this case a little bit lower, but the performance, the direction of the market is actually right there where it should be. So we'll cover the stock markets here today. We'll go through all this, take questions here at the end, and see what happens here. If we go over to the charts, we'll take a look. We'll start with the Nasdaq. How about that? You got the Nasdaq actually working its way back to positive after hours here. We started with a gap down today. I shared this before. Any gap of 1% down or more on a Monday, you got a 50-50 shot at a positive gain for the day, right? So it's not one of those, if you gap down 1%, as we did today, you usually don't go positive. When you do go positive, the average return is only 0.02%. So it's really not anything exciting in terms of reversal days if the Monday meltdown, if you will, turns into a reversal there. So that's the case. The Nasdaq pulling back here, still up 25% year to date, nearly went positive by the end of the day. If you look inside the Nasdaq, the theme today was the stay-at-home trade. The stocks would benefit from people staying at home because of the virus concerns and everything. You got 3.7% gain on Netflix. You had Zoom doing well today, almost back to new highs. Zoom adding 7% on the day. Semiconductor stocks did really well today. AMD is one of them at the 50-day moving average, up 4% on the day. And I knew I'd mess something up. Come on, man. DocuSign, there you go. Nice reversal today, 5% higher as it tries to come off of its lower lows there. Interestingly, the Nasdaq is now inversely correlated to the S&P 500. It's not the first time that's ever happened, but kind of interesting, right? So the Nasdaq and the S&P are not even correlated at this point. They are now oppositely correlated to each other by a small fraction of a percent there. And that's what you have in the Nasdaq. For the S&P 500, let's go over to that one. You had a slight down, well, you had a good down day today. It finished down over 1% on the day. You got your 10% pullback, right? Some people have been waiting for a 10% pullback from the highs. There you go. You officially hit it today. Saw a little support come in right about that area today. We got a little support coming up off of that as people like that 10% area for a pullback. Amazon, there you go. Amazon was one of the laggards on the day, although it did recover towards the end of the day. Banks were also the laggard there. JP Morgan, one of the bigger ones. JP Morgan down about 3%. You got some scandal issues there, man. $2 trillion that they may have been funneling around. They shouldn't have been funneling around. We'll see. Berkshire Hathaway down 2.5%. Also, those were the bigger drags on the overall S&P today. The good stocks, the ones that stuck out a little bit, were in the semiconductor space. Lam Research off the 200-day. We talked about this last week. 2.5% higher on the day. We already talked about AMD, and if we look at AMAT, nice reversal today, up 2% by the end of the day. That was even a good one, although it sold off just a touch more there. So the question you have here, I'm sure you got it. You got Monday meltdown. Do we have a turnaround Tuesday? You know the old turnaround Tuesday thing? Let's take a look at it and see what we got here. Here's the stats for you. Now, the market did recover just over a little bit at the end of the day. It didn't close down 1.5% in terms of the S&P, but by the time we put together the data, this is what you get. What we're looking for is the percent of the time the market is positive on Tuesdays after Monday is a loss of 1.5% or greater. Almost 70% of the time the stock market finishes the next day, turnaround Tuesday, being positive there, Tuesday being an available day. So if Tuesday was closed for some reason, we didn't count it. And there you go. So we're looking for a potential turnaround Tuesday. That's why it gets the name Turnaround Tuesday. This data goes back to 2000, so you can look back 20 years and take a look at it there to see what's going on. The average gain is not all that good, though, 0.22%. Median gain, 0.18%. So it's positive, but it's not like it recovers the full day there. That'd be something fun to go over, see if we can go even further into that and see how often does it fully recover from its nasty Monday to be kind of easy there on you. Hey, our FinTips videos this week, we got a couple good ones there for you. Today we had how a 40-year-old plans for an early retirement, meaning he wants to retire at 50. So we went through an example for a customer. How are they going to go about allocating their dough? You know that if they want to retire early, they probably have to save a lot more money, but specifically, how do they do that? So that's our FinTips videos for today. We're going to revisit on Wednesday 4 reasons you may not want to use a Roth IRA. They are popular. I get it. The tax is all being paid, but there are times where maybe that's not the best thing to do. So I'm going over that going through specifics and stuff to help you out there. And then on Friday, we're going to have fun with a little math trick that most people would get tripped up on. Sometimes the software does all this stuff for us and we forget how math actually works. So I'm going to actually go through that with you guys on Friday to show you something, maybe a little bar trick you can play on your friends in terms of saving or getting a loan. So we'll go through all of that. Surely some of you are not going to like that answer, so check it out on Friday. Hey, our Wine and Wealth class this Thursday is going to be on Nest Egg. We're going to carry forward with that. That's our financial planning software. It's actually called Right Capital, but we call it Nest Egg, and we're going to go through some of the withdrawal strategies there. And then in our research site, Cody is about to post a nice post on comparing Penn National to DraftKings, right? There's a lot of talk out there of those two, sports betting and everything. He's going to go through a very detailed research report on that to kind of paint the picture of what's the difference between the two, give you some heads up there, and see what you want to do with that news. With that information, let's go over to the sector breakdown here for the day and take a look and see what's going on. Everybody was down on the day besides tech. Tech was the only one that reversed course and turned positive for the day. Many names in this sector started off down but reversed real quick. In particular, you got names like AMD, right? We talked about this a couple times already. It's good stock today. PayPal reversing course, going up 4% on the day, and Adobe, good day for Adobe, off the 50-day moving average, looking good there. The weakness in the tech sector was FinTech. You got Visa down by 2.5%. MasterCard also down, but right around the 50-day, not too bad there. You had, You had Broadcom. There you go. Broadcom finished the day down. Cisco and IBM. Oh, come on, man. Can't type anymore. Cisco down here. Nice little pullback on Cisco if you like that sort of thing. IBM also breaking below the range there. Typically a snoozer, but that's what you have there. I want to point out Apple real quick. Good reversal day. It was up 3% by the end of the day after being down, right? Apple fell 20%. That's considered a bear market. So we say, well, what does that mean, right? How often does Apple go into a bear market, and does it matter? Does it change anything? Here you go. Here is all of Apple's bear markets there. What we did is we took a look at the bear markets, every decline of 20% or more. That's what's indicated by a bear market. And the average is 33% down. It averages a loss, or that decline averages 112 days. Here's the thing, though. Those are averages. Sometimes when I just spout out these numbers, it's easy to get wrapped up in things and say, oh man, look at all these down moves in here. The average is 33%. Therefore, you just take 33% of the high from Apple and you go, oh, that's around like this area here. It should fall around 90 bucks or something. Remember, these are averages, right? If you take it a step further, we look at the days, the number of days that Apple experiences a bear market, meaning how long it stands in there. And you can see very quickly that the average is kind of skewed by a couple really big bear markets that it had in 2012. 2012 and 2015. The median decline is 31% over 76 days. So if you want to use the median performance there, that's what you would do. If you did that, that means that Apple would be around 92.50 if it continues this decline here. What do you think? You think Apple goes down there? We'll see what happens, but now you got the data there to go with it. Let's see what happens going forward. Communication services were weak on the day. Found a little support around the 10% pullback area. That is now 10% down from its highs there. That would be known as a correction. Look, today in this sector, you had people kind of trying their hands at different areas, right, than some of the more obvious names like your Facebook and things like that, Google, Alphabet. Electronic arts was higher today. Maybe the stay-at-home trade, but I think a lot of this had to do with Microsoft. Microsoft got an acquisition out there. They're buying ZeniMax, by the way, and so that helped the gaming trade today. But if you could have lumped it in and said, oh, it's a stay-at-home trade, but really I think a lot of that was spurred by all the action going on in gaming with Take-Two, Electronic Arts, Nvidia, things like that. And so the communication services sector was down today, but not as bad as it could have been, I thought. You got financials down today. Don't like to see that. We talked about it last week. You got a hinting of a lower high. You never like to see that. Well, today it just gave up. Man, down 2% on the day. This is a bear market sector and has been a bear market sector, meaning it's down over 20%. All of the majors in the space were lower on the day. Well, almost everything was down on the day. Down 3% for Bank of America. That's a clean breakdown there, not looking good. Citigroup was also already weak and had already begun to sell off there, but that one was kind of weak, and JP Morgan was one of the worst out of the group today on that whole money scandal that came out. Kind of freaky. Healthcare stocks pulling back. That's not just because the markets were lower today. Now you've got new concerns about Obamacare. What's that? Well, you get a new Supreme Court justice, and there's going to be a fight about this. But if there's a new Supreme Court justice before the election or sometime in that ballpark, the concern is that Obamacare could be overturned. There could be concerns around that. And so because of that, you got healthcare weak on the day. A lot of names in that space were weaker, really sadly, because of Ms. Ruth Bader Ginsburg passing away over the weekend. So that's what you have with the healthcare sector. And if elections didn't cause volatility enough in that sector, hold on tight, because you got a whole lot coming up there. If you have healthcare stocks and they've been a lot more volatile than usual, now you know why. Gold down 52 bucks on the day. Let's call it $51 actually. So gold breaking through the low end of the range. You had the dollar moving higher after quite a bit of time sitting here at the lows. That was one of the reasons for that. Oil did recover a little bit by the end of the day, but still lost 3% on the day. It had a real nice recovery last week. Starting to get back into the chop zone there. It's a little bit tough to look at oil right now. And that is your sector breakdown for the day. Let's go to the new highs, new lows. It's not a lot. There's just not a lot going on out there. Here we go. Oracle. That's your 52-week high, and it pulled back, right? So that's it. That's all I got for you there. You had two new 52-week lows. I'll take a look. Oh, there we go. You got Coty hitting new 52-week lows. Serious volume there, down 1% on the day. And Molson Coors, which was already pretty weak. We talked about that in the beverage space. They were the weaker ones out of the group. They were down. So what I did is I put a few other names in the mix for you. You got Huntington. Well, Huntington is within 4% of making new 52-week lows, and Gilead Sciences, which has been hovering around the 4 to 5% range, is also in the mix there as well. For fun, if you want to look at EQR, this is a REIT. They are 5% away from hitting new lows and had a rather nasty day today. So that's really it in terms of your new highs, new lows for the day. I don't really have anything else to offer there. So I will move on to our watch list. Every day we try to give you a watch list. This is not a list of stocks to pick or to buy. It is a list of stocks to just watch and see if maybe they fit something interesting for you. Well, today we're going to look at pullbacks, and probably the majority of the week we're going to look at pullbacks in one way or another. But today what we're looking for, look, the market's down 10% in this area here, and so we're looking for stocks that are performing better than that, right? Maybe they've pulled back more, but they have year to date, they're doing better than the market, and what we're looking for is those stocks that have pulled back. So it's a way of looking at relative strength, of saying these stocks were strong, the markets became weak, and so they fell a little bit. That's okay, they just fell a little bit, but otherwise they've been very good, strong stocks there. So if we take a look here, you got eBay as the number one pick there. So eBay is still up 30% year to date. It has pulled back and pulled back ahead of the market, so it loses a point for that, not quite as relatively strong. But today it was positive, up 3% on the day when the markets are weak. You get a point for that. That's something that's interesting, and I would argue it's a little extended in the short term. You got Chipotle also pulling back. This stock has been really, it's done well throughout the virus here. because of their Chipotlanes, I would argue, and people still ordering online. I think it's 80% of their total orders have been mobile as of the last quarter there. So the stock has pulled back a little bit, right in the 50% area, 50-day moving average area, and also right off those prior highs. We're taking a look in here. A little bit of price support if you like that sort of thing. Still up 45% year to date. Looking at Clorox, nice little pullback there. It's been a strong one. Obviously, it's done well in the consumer staple space. A little bit extended here. It was positive on the day there. It's up 35% year to date. Gives you about a 2.3% yield if you're looking for something like that. That's a little bit slower, a little bit more stable. That one may be interesting to you. If you like the high flyers, you're looking at Facebook. It was down on the day. Facebook's still up 23% year to date, and maybe some political issues there, right? With the Department of Justice coming after them, maybe looking into some of that stuff there. Anyways, it was down 2% on the day. This one is also pulled back off of highs. You got back into this little price support. Technical traders are looking at this area. So is this roughly the 250 area, somewhere where it's going to bounce? So maybe one to take a look at. Market Access, we've covered numerous times, a bond trading platform that really has no competition. So very, very, you would say it's one of those companies that has a moat, right? You look at company, they call it a moat. So meaning there's not a lot of competition. The barrier to entry, whether it's regulatory or whether it's capital intensive, things like that, make it very difficult to compete against somebody like Market Access. Well, they've pulled back down to the 200-day moving average, about 50% from the lows to the highs there. It's up 15% year to date. And this is an area technical traders look at saying, well, maybe this is my spot, right? I've been looking to get into this. Maybe this is my spot. Intuit's another one, up 2.5%. Nice, sharp, quick pullback there and a quick bounce reversal that may grab your attention here today. It's up 14% year to date. Just putting together a little watch list for you. General Mills up 1% on the day, 7% year to date, and pays a 3.5% yield. So if you're looking for that consumer staple in that space, you know who they are. It's cereal and whatnot. And that is your watch list for the day. Real simple one to get started for the week. Hope you enjoy. All right, let's take a look. One last thing. We got stocks in the news, and then I'll take your questions if you happen to have any there. Let's see what we can do. Stocks in the news. Okay, Delta Airlines. We're going to start with this guy here. So Delta Airlines down on the day by about 10%. And Delta Airlines says they're seeing some quite small shoots of demand coming back. They were very cautious to say that, by the way. I would argue that things are much better than people are pointing out. Now, I'm not going to argue with Delta, and they know their numbers probably better than I do. But I flew this weekend, and the airports were as busy as I've ever seen them, right? They're just normal, typical end of summer, fall type traffic. The airplane, both there and back, was filled to capacity. There was no spacing in the seats there. It was every single seat was filled. Put your mask on, get on the plane, go enjoy your ride. It was very, very busy. That was Spirit Airlines because they did a nonstop flight. And as I put in the notes from Jazz email, it was very cheap. It was $17 to get there, $35 to get back. That's pretty cool if you ask me for a nonstop flight. The point is, very booked. The flights were booked all the way there. Watch some of the other ones. Listen to the guy on the announcement thing saying, now boarding this flight, blah, blah, blah. Please note that today is a full flight. Every one of them said, this is a full flight today. They were busy. So I don't know. I mean, you can look at the TSA traffic. We've covered that numerous times, but Delta still lower on the day. I would argue that things are better than what they seem from what little data I have to offer. Hey, Etsy gets added to the S&P 500 today, up 4% on the day, looking pretty good there. You might have noticed that the founder of Nikola stepped down. He literally just got up and left, right? Nikola, down 20% on that news there. There's a lot of fraud accusations going on there. I don't know if they're true or whatever. I guess that's up for the regulators to decide. But the stock was down pretty significantly there. Oracle is in the news today. They're going through the whole TikTok thing. You probably follow the drama. I don't need to update you more on that one there. But it did hit new highs. It was higher to start the day on the news that the deal would go through and everybody was going to agree, both sides and the president. And then there was some news that maybe the president wasn't happy with it and he was going to still shut him down and everything. But then the White House came out and said, we're okay. We're good. We're going to move forward there. So a little conflicting news there. Still pointed a small gain there for Oracle. We'll see what happens. Facebook. Got a price target raised today. Morgan Stanley raised their price target there. They said all the new services they're coming out with means that the stock price, where it's at right now, is a good value. They had a lot of good things to say about it. I don't have their price target for you. I'm so sorry about that. And that's all I have for you there. I'll get ready to take your questions if you have any, but dividends coming out from Broadcom, $3.25. That's pretty much it. And a couple other names being added to the S&P 500. Today's the day. Today's the magic day there. If you have any questions, let's see what I can do for you and go from there. We will see. How did Tesla do on the news? Tesla held up nicely. Got to give that to Harry, man. 1.6%, looking good on the day with the Nikola news coming out there. You know why? It's because there's actually Teslas on the road. They have a business model. They produce something. They have a factory that makes it. Nikola, not so much. And interestingly, General Motors was down on the day too. General Motors took a bit of a hit, almost 5% down on the day. They're not looking so good, right? That maybe they fell for what could potentially be not fraud, but like misleading information. So that stock was down on the day because of that. And we'll see what happens. The drama will continue there. Jay says, Dustin, do you expect more correction for tech stocks in October before the elections? I'm buying small chunks rather than going all in. Like the idea that you're buying in small chunks when you know volatility is there. Could be earnings, right? In this case, it's elections. But if you know that there are the volatility is part of the potential short-term future, then yeah, you always buy in chunks. So I agree with that. Cool. I like it. Oh yeah. Is it worth it? Is it worth switching to the Roth 401k with 5 years left to retirement after doing a traditional IRA for the last 30 years? Is it too late? It might be too late. Depends on your income. If you're making a lot of money now, you probably don't have enough time to offset that what you would have got in terms of the reduction in your taxable income. 5 years is cutting it kind of close. I would just measure the numbers, look at them together, and see what makes the most sense for you. But generally speaking, if I didn't have any data, as I don't at the moment, I would say it's probably too late. You get more benefit for going pre-tax, especially if your income is higher. I like it. Oh yeah, I love it. Paul says, thanks for the early warning about September. Yeah, that's pretty cool. I like when things like that work out, you know? That's cool stuff. And interestingly, shout out to Cody back there, basic materials being the weaker area. What is the weakest sector typically in September? Basic materials. So that's all highlighted for you in the research site. That was posted on the 14th, by the way, to give you a heads up. We wanted to kind of show the second half of the year or month and see what happens there. Yep. What do you think about the bigger banks with the second round of stress tests and the scandal that broke? The scandal's not good. I give you that. You don't ever like to use the word scandal when you're talking about something you might own. Stress tests, I think, are still up in the air in terms of whether they're going to cap the dividends and cap the buybacks. I think they're going to. It'd be just too much of an optical headache if they just sort of lifted that. Now, it depends on the news. If they can squeeze that through in the news cycle and it won't be a big deal, you know, that's something they can do. I'm a little bit jaded because I was rereading a book on the airplane, The Creature from Jekyll Island. So I'm a little jaded right now about the Fed, but that's just because what I read or what I'm currently reading. Yep. Harry says, if we get a second wave of the virus, I'm assuming, is it reasonable for the work-at-home stocks to rally again? Yeah, I think it's more obvious this time. The retail trader would just say, I don't know, let's go with that if there's a second wave, because the first wave, it was harder to say that these would be the good stocks, right? We posted a list for our clients. We put it in notes from Jazz. As the virus started causing concerns, we said, well, what are the virus-related stocks that you might want to look at? Made a whole list of them, built a portfolio out of it and everything. But now it's more obvious. If there's a second wave and the whole Europe thing starts becoming more and it bleeds over here, I think people just go, I give up. I'll go right for those stocks. So you're probably right. Yep. Yep. Yeah, we'll see. Were I surprised by the Nikola news lately, or did you know like this company had a long way to go? I've been sort of picking on them. Yeah, I don't like to take sides here, but numerous times have said, hey, they don't have anything. They don't build anything. They have no way of building anything. They actually had no deals with anybody prior to GM to actually build anything. They're selling contracts on garbage trucks, which weren't even something that they were going to build. If Elon Musk had to go through what he had to go through just to build one car, remember he started with one car. Let's just prove the car and build it. And these people are spread out all over the place. It's going to take an ungodly amount of money to make that happen. So, you know, I'm not going to say I knew or thought or anything like that, but you talk about a guy that had a major hurdle to overcome just to get any production of anything public. That's a tough one. That's a tough one. Yeah. You just started a position, today on Bank of America. So you saw the discount today. You said, all right, I'll take a shot on that. Can't blame you for looking at something like that. You might have a little bit of a roller coaster ride coming up. You know, sounds like you're okay with that. AT&T, I can't argue with you here. You're probably looking for a dividend stock. It's been quiet for a while, started to roll over, and you say, well, I'll nibble a little bit. If that's the case, I can't disagree with that. Yeah. Fun worth a look on a watch list based on your visit. Oh, yeah, make a watch list based on what I saw. Theme park was packed. Hotel was fully booked. It's not what I've been seeing on TV. And I don't have cable TV anymore, but everybody's been saying, oh man, everybody's at home. They're stuck. I tell you, Disney was packed. Disney's actually completely at capacity there. So it's like, what? What's going on there? Oh, Universal too. They did a special Halloween sort of trick-or-treat thing, and the line was backed up through the whole park, all the way back out to City Walk, if you're familiar with the area there. Well, it wouldn't be that way if people were scared, would it? I don't think it would be. I like it. Yeah, that's a shame, Harry. That's a frustrating topic, probably for Tesla more than me, but I think that's a shame that certain states won't allow them to sell their cars because they won't go through dealers. No, come on. I could certainly see them being easily able to fight that, but that's an uphill battle in itself. Yep. David says, you got GE, think it's on its way back down due to the news there. Well, GE has no reason to just wake up and take off, right? So you know that, right? When you buy that stock, you know that you're taking a shot and it's not going to be an overnight success with everything they're doing. And I think they're doing it well. I don't have anything bad to say about them, but you know that that's not something that gets priced in overnight. It's not going to be a Tesla type move. When you get those pops like that, like you had over the past couple of days, short-term traders are going to recognize that and say, all right, I'm out. Yep. Casinos are tough, right? Yeah, you got a bit of the virus-related decline today. They all sort of took a hit there. I would let them breathe a little bit, meaning come on down a little bit more. Just give them a little bit of a break, right? They're sort of priced at full capacity at the moment, meaning they're up and running and everybody's gambling again. I don't think that's the case at this point. Favorite Cedar Point roller coaster, hands down, Steel Vengeance. Hands down, man. Just all and you know I like my roller coasters, so I could argue that Space Mountain is the second best roller coaster that's out there. And I know that's a tough argument, but I mean, all factors considered, I mean, I think Steel Vengeance, hands down, best one. Best one I've ever ridden, man. I loved it. I loved it. I loved it. I love it. All right, well, I'll wrap it up there. You guys don't want to hear about that. We've covered the markets here today. I do appreciate you guys hanging out and supporting us. Really do appreciate it. If you want to check us out, jazzwealth.com, you know where to find us, or check out some of our other videos. That's always fun, too. I wish you a good rest of your day, and see you later.